Happy Thursday out there, folks. This is Darius Dale here to present our macro minute for Thursday, July 14th, 2022. Starting with asset markets, we have stocks down this morning, commodities down, crypto up, dollar up, global bond yields up. Market moving headlines, even the doves are hawkish. So the Cleveland Fed's Loretta Mester, who dissented last meeting, said the data suggests at least a hike of 75 basis points this month. That meeting's next Wednesday, or sorry, not next Wednesday, 2 Wednesdays from now on the 27th, but did not spell out if she would favor going even bigger. San Francisco Fed's Mary Daylor said 100 basis points is in the range of possibility. So the entire curve, the entire distribution of probable outcomes as it relates to Fed rate hike policy is shifting to the right. Very much so. As for investors, they're betting on a full point move is more likely than not. So greater than 50% probability of a 100 basis point rate hike on the 27th. So definitely be aware of that in terms of how that may incrementally get priced in between now and then, just based on the Fed speak we have between now and the end of the week, which, oh, by the way, will begin the Fed FOMC blackout period. So don't expect Bullard to say anything particularly dovish tomorrow. Anyway, the Fed likely won't react to early recession signals if it's the cause for the recession. So the inversion between the 10-year and 2-year, which is obviously a long-term leading recession indicator, is now at the deepest level it's been since 2000. That was not a buy the dip opportunity in 2000. Market got cut in half from there to its lows in October 2002. In a liquidity cycle downturn, liquidity is key. So crypto lender Celsius filed for Chapter 11 bankruptcy after its June decision to halt withdrawals amid a panic run by clients. Bitcoin rose to about 20,000. JP Morgan said the token's cost of production has dropped from about 24,000 at the start of June to around 13,000 and warned it may be negative for the price. So this is something I talk about all the time. When you talk about the marginal cost of production, the marginal cost of production goes up and down. It's not a static figure with respect to Bitcoin, with respect to crude oil, with respect to any commodity. You have to understand that there's always things that are moving in, puts and takes that are always moving up or down whenever you try to model these things out. But at the end of the day, going back to this Chapter 11 bankruptcy and the panic run by clients, again, these are the kinds of things you see in a liquidity cycle downturn. And according to our analysis, both from an inflation perspective and labor market perspective, it's very likely that the liquidity cycle downturn gets worse over the medium term before it actually gets better. If you're buying risk assets here ahead of the liquidity cycle downturn getting worse, you better have a very, very staunch view, very data-driven view that we've already priced in the full brunt of that getting worse. And in our opinion, it's impossible to price in the sort of mechanical dynamics associated with quantitative tightening and the continued rise of the reverse repo facility. Anyway, this is going to end so incredibly poorly. The first U.S. leveraged single stock ETFs debut today, accompanied by regulator warnings over their risks. So, by the way, we can't get a Bitcoin ETF for Bitcoin besides the futures, but we can get levered single stock ETFs. They got Tesla, NVIDIA, PayPal. The SEC says they represent particular risk, and even the AXX CEO, the people who are launching the ETFs, admits they're meant for sophisticated, active traders, not buy and hold investors. So folks that are looking to buy the dip because they think the full brunt of the liquidity cycle, growth cycle, and profit cycle downturns are priced in, go have a day. Go buy yourself some levered Tesla, NVIDIA, and levered PayPal. And I think there's 5 other ETFs as well. I'm guessing probably Apple, not Microsoft, Meta, or whatever. They're probably in there as well. But anyway, this is not the kind of stuff you tend to see at market bottoms. People don't launch levered stock ETFs at market bottoms. They usually are closing business at market bottoms. I would fully expect AXS to be somewhere out the door when this thing is finally done. Anyway, big movers. Russell 2000 down 1.8% this morning to off only 1.1% month over month. So it was actually up month over month prior to this morning's decline. Haven't really moved much. We got OPEX obviously tomorrow. And then, oh, by the way, we get a 5-week window between tomorrow's OPEX and the August OPEX. So those Vanna and Charm flows, which tend to be quite supportive in a negative whenever the market's short gamma, whenever dealers or short gamma, sorry for that, those flows are not going to be as supportive over the next 5 weeks because you have to extend them for an additional week. So that could potentially open up a window of weakness for markets, into and through the teeth of peak earnings season. Anyway, Bloomberg Industrial Metals Index continues to price in a recession, down 3% day over day to down 20% month over month. WTI crude oil down 5% day over day to down 23% month over month. Looking at our volatility adjusted momentum signals and probable ranges, U.S. dollar index, bullish VAMs, continues to be fueled by the gamma squeeze that we highlighted in our leadoff morning notes going back a couple weeks ago. Gold bearish VAMs still lower at the still oversold and just obviously not bouncing. This is one of those assets where people are looking for liquidity, in so much that the the Celsius crypto lender Celsius clients were looking for liquidity from their balance sheet. 10-year nominal treasury yield bullish VAMs. That's not quite oversold yet. High yield credit spreads bullish VAMs in the middle of its probable range. S&P 500 neutral VAMs. A little brief stint in neutral VAMs. We had another brief stint in neutral VAMs kind of in late May before we ultimately gave way to more downside in June. Anyway, in the middle of its probable range, the VIX is neutral VAMs in the middle of its range. NASDAQ 100 bearish VAMs. Got about more or less in the middle of its range, a little bit more downside than upside. Russell 2000 neutral VAMs, closer to the lower bound of its probable range with more upside than downside. Bitcoin bearish VAMs, you got about 12% downside, 9% of upside. Ethereum bearish VAMs, you got about perfectly fair fight, 13, 12 there in terms of percent upside and downside. Bullish VAMs, Chinese Shanghai Composite, that's at the lower bound of its probable range. Bullish VAMs, WTI crude oil, still hodling the lower bound of its probable range. I think we were on this program, I don't know, maybe it was a month ago. It was probably around a month ago where we said, this thing looks like it's starting to break down. I'm no technician, but we snapped that trend line, and it was right about a month ago. And I said, I think the energy trade is long in the tooth. We had the probability of deflation rising from a macro regime perspective here at 42 macro. That probability has since risen, and what we've seen is crude oil continue to decline. Now, if you didn't book your gains in long energy, long energy exposure like we did, I want to say it was the week of this June 20 something, and then we removed all of it the week of June. I think on June 29th, that was the last we got out of energy. If you haven't sold it then because you didn't subscribe, then guess what? You're losing money on it today, and you don't need to be losing money on it. It's a very, reasonably priced product. I think our Around the Horn is, or if you can't afford the full macro bundle, which by the way, if you're an institutional investor or a professional investor, RA investor, you have no bit. I think it's fiduciarily irresponsible if you don't subscribe to the macro bundle. It's so cheap relative to all the other assets or alternatives out there that are causing you to lose money in the face of someone helping thousands of investors around the world make money. I don't understand it. If you're watching this program on a daily basis, if you have not yet subscribed and you are losing money, those two conditions need to be met for the following statement I'm about to make. Shame on you. Anyway, agricultural, bearish VAMs, not quite the lower bound of its probable range. Industrial metal, bearish VAMs, not quite at the low bound of its probable range, pricing in an actual recession. Hashtag actual recession. You heard it here first, folks. Thank you so much. We'll catch you back here tomorrow. Darius Dale presenting our Macro Minute. Cheers.